Hello and welcome to another Trades and Tutorials video. This is Jeff Fish, president of MarketGauge.com, and in this video I am going to take a look at Deutsche Bank's raising of its price target on Amazon from $770 up to $1,000. Yes, you heard it, $1,000 is a new price target for Amazon. So I've got another way you can play Amazon, and also I wasn't expecting the upgrade, so in this video I'm also going to talk about which sectors and which groups you should look at as being the ones to focus on as they pull away from their 50 and 200-day moving averages. And more specifically, we're going to look at the triple play indicator that you can see down here, which can indicate which groups and sectors are likely to continue to move up versus the ones that are likely to drop down. All right, but before I get into the details, I just want to make sure that if you're just finding us on YouTube, that you subscribe to our channel. And you also know that you can get more videos like this at marketgauge.com/tutorials. And you can follow us at MarketGauge and at Market Minute if you're a Twitter follower. And of course, if you're finding us on Facebook, please like us there as well. Now, also be sure to watch this in HD, which you can do by changing the settings in the lower right-hand corner. All right, so let's get started. Amazon, $1,000. Well, quite frankly, I don't know if it's going to happen or it's not, but we are at a very important inflection point here, no doubt. And as you can see from the triple play indicator, which measures a stock's leadership, price leadership in this case. We have one for volume too, but I'm not going to cover that in this video. If the blue is over the red, it's leading the market, and that's what you want to see in markets, in sectors, in stocks. And so when Amazon pulled back to its 200-day moving average, this green line, and broke out over its 50, the blue line, and the leadership line turned over the red line, that told you that this had some real momentum through it. It wasn't just being pulled up by the general market. And it rallied nicely up into earnings. The triple play does not predict earnings, so I can't take any credit for that. But having a good earnings report and gapping up here and then holding, this is one of the reasons I've been talking about Amazon ever since the earnings and leading up to the earnings. So there's another way you can look at trading or participating in Amazon with a little bit of a hedge to it, and that is the ETF XLY. So Amazon is 10% of XLY, consumer discretionary, and there are some other good names in XLY like Home Depot and Walt Disney. Walt Disney comes out with earnings either today or tomorrow, so be careful with that. McDonald's. So there's some good names in here. Now, if you take a look at the leadership line here, what you want to see when markets are potentially breaking out is that the leadership line is in fact leading. So here's a way that you could be long an ETF with a substantial exposure to Amazon if you believe the 1,000 price target makes sense. And even if you don't, if you believe Amazon's going to remain strong and the consumer will remain strong, this is one of the groups that is performing relatively well as this market has pulled back to the 50, and on a price leadership line, its momentum is picking up. Now you could say, well, yeah, that's because Amazon is in it, but it's not entirely true because, again, Amazon is 10%. This thing is still bumping up against the highs from April. All right, so as I said, there are other good strong stocks in there, McDonald's being one. And McDonald's on its leadership line has turned up too. So this breakout over its earnings consolidation is looking quite healthy. And if in terms of a similar scenario, here's a situation where McDonald's broke out on great earnings, held, and then its leadership line kept you focused on the fact that it was pushing higher. A retracement to the 50-day moving average, much like what we're seeing here, was one that was worth following. Now, it got hit hard. I don't know if that was earnings or what the news was there, but you can see that when that happened, its leadership fell. And it wasn't until its leadership came back over the red line here that it continued to move higher. So here's another stock in that same ETF that's looking good. And let's just take a look at one more that I know looks good as well, and that's Home Depot. So these are the 3 top stocks, so that's essentially 23% of the ETF. And so you've got a little diversity there, and you could go down through Comcast, and I'm sorry, McDonald's is not the top one. Disney would be the top 3. Now this has earnings, but you can see on the leadership line as well, when it turned positive after coming down to the 50 and consolidating. These are the kind of patterns we want to look out for right now as the market has pulled back to the 50-day moving average. Which markets, whether they're sectors or whether they're individual stocks, begin to lead? Because if the market is going to make another leg up, we want to be in the leaders. And an easy way to find that is with the leadership line. Another way to do it is to look at new highs, although that's not quite as effective and you have to buy new highs. And also to have a good intuitive sense of which stocks are moving. But the leadership line obviously makes all that easier. More importantly for right now, you've got Amazon, Home Depot, Walt Disney, Comcast is number 4, McDonald's number 5. So that's almost a third of the XLY looking good as individual stocks, and the ETF itself looks great. Now, if you want to follow which ETFs are leading the market, you can go to our resources section in our site and go to little big view, and from there go to sectors, or you can go to marketgauge.com and just type in /sectors. It'll take you to this page. So if we just take a quick look at the groups that have been leading over the last 6 months, because this is rated by 6 months. We've got utilities, consumer staples, real estate, industrials, materials, consumer discretionary. So XLY fits in about halfway. It's down over the last 6 months, but if it breaks out, starts moving up, it's going to flip to positive, and that's exactly what we want to see. So a couple other groups to pay attention to, and we'll take a look at them on the leadership line here. XLP, there's a group that could rally if the market rallies. Utilities, that's been a leader, but it's also quite defensive. We'll have to see how that works out. IYR, let's take a look at these top 3 on the list and see how they're looking in terms of leadership. And then I also want to point out XLF as one to keep your eye on. But just starting from the top, XLU, the utilities, you can see they are positive. Now, one of the things you do want to do with markets in general is when I'm talking about looking at stocks or sectors or whatever that are coming down and bouncing off of the 50-day moving average, I don't care what indicator you use. If the market breaks the level that you think it's supposed to be holding, you want to get out of the way, right? So the value of any indicator is to confirm whether or not you should expect it to break or not, and then also to get out of the way when it does. So in this case, when XLU started consolidating after a hard break and its leadership started falling apart, this is not a pullback to the 50 that I want to be buying. I want to wait until it shows some real strength, which is right in here. So that's right about the same time or price point, in and around the $48, and now it starts to head higher. Having said all that, if XLU breaks down below this low here, I would be out of the way regardless of what the leadership line looks like. And the reason for that is we have others that are looking even better. So let's take a look at XLP. So XLP is doing what the leader should be doing, right? Its leadership line breaks out right here, and as it's pulling away from its 50, and now it's out to new highs. All right, so that's the type of leadership we want to be in. Another example of that is IYR, right? These are just the top 3 we're looking at. And so if you were looking at this leadership line as it pulled back into this area, you could see it starts to pop right back up over here, and then you've got a nice breakout over this high that's continued over the last several days. Now, if this pulls back into this area and the leadership line holds up, that's going to be a nice pullback to take advantage of. All right, so moral of the story is, as the market has pulled back to the 50-day and markets, stocks, sectors start trying to move back higher, you want to make sure that you're in the ones that are leading, not just the ones that are being pulled up by the general market. The leadership line is one way to do that. If you're interested in more about the leadership line, we're going to hold a webinar this Thursday. There should be a link on this page to be able to get more information about it. And until next time, trade safely. Keep an eye on those 50-day moving averages. They're big numbers right now. The market really is at a major inflection point.